To tell us now more about what is ahead for Greece and some other economic news of the day, we're joined by Peter Cardillo. He is Chief Market Economist at Rockwell Global Capital. Peter, Sunday, the EU has said is the drop-dead date for Greece. The deadline sometimes shifts in these discussions, certainly. Do you think that they're going to have a deal done by Sunday? And if not, what happens Monday morning in Athens?
I don't think they'll have a complete deal by next Sunday, but I think that they will at least have a deal to give them a short-term loan that will be able to take care of some of the obligations that are coming up next week. And that, of course, would avoid another
€3.5 billion or so?
Yeah, that's correct. And that would avoid a Greek default.
But the heck about the default for a moment. Are they going to give the banks any money so they could open up? Because right now they're limited to €60 a day if you're a Greek citizen. And the word is that they won't even be able to do that on Monday. They're going to run out of money.
That's right. And I think that will be part of that deal. And so I think the ECB, obviously, once they have an initial agreement, at least to stave off a technical default on their obligations, that they already obviously defaulted on the IMF. I think then the ECB will begin to pour in more money on the emergency loans, and that will give them a chance to open the banks. And, the question is, will some of those banks survive or not? That's still an open question. But I think when it's all said and done, I think we're probably going to see Greece stay within the euro. I think a deal will be eventually reached, and it's to the best of interest for Greece and for the eurozone, and probably for the global economy as well.
Everybody sort of backed themselves into a corner here. You have the Prime Minister of Greece really with this quote mandate from the voters, which apparently reports said he didn't expect, and then Angela Merkel, who is holding a very hard line. Has she given herself enough wiggle room here to come out of it on Sunday to save face if they have to compromise?
I think so. And I think, look, this all led up to one problem. And it basically is very simple. And that problem was political in Greece. Since this government has taken control, it's a leftist government. They have to save face. And
they also, and I said this every day, and I don't know if you agree with it, weren't they? Don't you think the people were bullied at the polls on Sunday? Not by the
bullied
government.
In the sense that they were bullied that national pride came into the picture. And if you heard a lot of the commentary that came out of Greece by the Greek people, you'll see that they said, we don't want to be pushed to the corner. But if we go back 14 years ago, it's Greece's fault that they got into this mess. They basically weren't truthful about their budget deficit. And so now it came back to haunt them.
But people aren't going to blame a 14-year-old.
Exactly, and someone has to give in, and I think it's going to be Greece.
There were some stories today that some hotels said they're accepting drachmas, but now they say that was a mistake. That's not possible, right? Now,
I don't know how they could be accepting drachmas when they're not around anymore, and I don't even know if they have the ability to print them.
Well, the old finance minister says they did not, that the printing presses were, quote, destroyed, but they do print euros, so I'm wondering why they just don't start printing more of those. I want to talk to you.
And back them up by what?
Exactly. I'll talk to you about the U.S. for a moment. The jobs reports today, the Fed minutes yesterday. Greece is clearly weighing on the Fed a little bit.
Absolutely. Not only is Greece, but also China. But, I think that perhaps there's a 50% chance that maybe the Feds won't raise rates in September. But it will be pushed off maybe towards December. But I still stick to my prediction that they will raise rates this year, because this quarter and next quarter we should see economic activity pick up to the point where we need to raise rates.
Yeah, Bob Rusk was on the show yesterday, though, and said that they telegraphed not raising rates for the rest of the year. He doesn't think they're going to be able to get there because he thinks there's still too much weakness.
I don't see the weakness, especially in the jobs market. The service sector seems to be holding up well. The manufacturing sector seems to finally be turning around here. Of course, there are global concerns. But I think that the time is here for the Fed to raise rates, and I think they will.
And could the housing market, though, support that right now? Because obviously
Absolutely.
That comes with you think so?
Have you seen the latest indicators?
But the question is whether that's because of the mortgage rates.
Well, of course, it's because of the mortgage
Low
rates. But the housing market has been. Well, depending, I shouldn't say it's on fire, depending what area of the country. Certainly, if you look at New York, it's been on fire. Come to Brooklyn, and it's burning. And it's burning.
There's no question. You can't get into Brooklyn. It's as expensive as Manhattan these days. And so is the other side of the river, by the way, in its parts of Jersey City and Hoboken in New Jersey. So it's spreading out. What is the danger? Walk us through the danger of waiting too long to raise interest rates.
I think the danger of waiting could be inflation, somewhere down the road. I truly believe that we've probably seen the lows in oil prices. And I think that, another danger is, of course, the biggest the danger that the Feds face is when they have to begin to unload their balance sheet. Mm-hmm. And that could be a real scary time for the markets.
Peter Cardillo, thank you as always.
My pleasure.